Alright, hey guys, very nice to meet you. My name is Brian. I'm from The Boring Husband. Well, I am The Boring Husband. Okay, so we're starting this channel today to just kind of give everybody a very quick summary of what's happening in the market, both on a daily basis as well as from a macro perspective. We try to talk about individual stocks from time to time, okay, but overall, in general, for me, what I really want to do is to keep finance very easy to understand for everyone. And I tend to speak really fast, okay, so you don't need to 2 times the video speed because if you notice out there, right, there's quite a lot of creators, they talk very slowly, then you don't want to waste time. So this is the speed that I usually talk at, so you probably have to reduce the speed if you can't catch on, okay? So the topic for today that we're going to be talking about is Tesla. Okay, now Tesla is a very, very tricky stock, okay? It's a stock with, or rather, even despite we've fallen to almost support levels of 100, people still find that these valuations are lofty. Okay, but yesterday, okay, very timely for this video, yesterday the stock fell by another 12%. Okay, and we can go through the entire earnings. Okay, they'll talk about new factory, they'll talk about basically 101 other things like how they missed estimates by a little bit. But in overall, if I could summarize the entire reason, okay, why Tesla fell by 12%, okay, it is because investors feel that they can no longer maintain the same growth rates that Tesla has been achieving the past few years. Now, Tesla has been growing, correct? The growth has been exponential. But right now, what investors are very, very nervous about, right, is that they find that this growth, it has reached what we call, not a tipping point, okay, not tipping downwards just yet, but this kind of exponential growth is no longer exponential, it's just growth. Okay, hence, if you're looking at a stock with just average growth, this is my thesis, okay, as to why the stock fell by 12%. Okay, now it's not all bad news. Okay, if we look at very, very briefly, just kind of looking over here, okay, their growth, okay, is still pretty much larger in terms of the number of cars delivered. You can look at the numbers. Okay, number of cars delivered, they are still by far I would say the leading in terms of deliveries. In terms of global deliveries, okay, Tesla is still like over a mile ahead. Okay, but the main problem here is that with this little miss in estimates, I think the estimates were 400 and let me see. No, not 400, sorry. It was, the estimates were, yes, they were expected to reach 420 to 430,000, but they came in at 405-ish. Okay, now the problem with this is that what investors speculate, okay, is that Tesla can, what we call, no longer churn out cars, okay, at the same rate that they were in the past. Okay, now there's a lot of reasons why they were unable to churn out cars. I think we've seen over the news, factories in China, they have been closed, COVID, blah blah blah, etc. Even the new factory I think in Germany, okay, they are facing problems. I think there are inevitable problems when it comes to doing business in Germany, so they have some delays there. And of course, we know supply chain crisis, logistics, blah blah blah, all in. These are all the reasons why they were unable to meet analyst expectations. Now, the question is, will they continue to not hit these targets, or will they be able to bounce back the next quarter? That remains unseen. But at present, we can see that with this 12% dip, investors are very nervous. They think that Tesla can no longer carry on this growth, and hence they sold off. Okay, now if we look a little bit on a broader perspective, okay, I believe on a quarter-on-quarter basis, this is still one of the best delivery quarters that they have delivered. Okay, so it is still very good. It is still growing. It's just that once again, if we go back to this kind of narrative that they are it's kind of massive, they just can't sustain that anymore. Okay, moving forward. Still an impressive 40% in growth deliveries year on year. But of course, it's really just not as impressive. Okay, so if I can just sum this up, okay, growth cannot sustain equals 12% sell-off. Alright, so just now you went into a little bit, about Tesla's earnings in summary. Okay, now we're going to go into a broader perspective, Tesla's fundamentals. Okay, so Tesla stock has fallen drastically from highs of 450-ish to I think levels of 100. So we're trading at over a quarter of our all-time high. Now the problem with this is that even at today's level, okay, Tesla is trading at a price to earnings ratio of about I think over here it says 33, so I know it's between 30 to 33, some depending on how updated your data is. This is actually not unreasonable, okay, because they were once their PE was I think almost 3-digit at one point in time. So where you are now, to say that Tesla stock is cheap, okay, it is cheaper, okay, but if you're going to compare it against the average Nasdaq PE, which is about I think 23, Tesla is still expensive relative to the Nasdaq PE. Okay, so if you want to say that Tesla is cheap, okay, I mean, in my opinion, the benchmark that I would follow, just take the Nasdaq PE. Nasdaq PE says it's 23. If Tesla PE dropped to 23, you can say it's not cheap, it's fairly valued. Okay, so this part you got to take note. If you look at other fundamentals, okay, behind Tesla, okay, we look at how Tesla often has this, or rather, they like to believe that they have a cult following, right? Okay, that in general, they cannot reduce the prices of their cars, that their cars command a premium. Okay, and because of this, okay, shareholders always believe that, you know, if the world goes into a recession, Tesla, the earnings will not drop. You know, because they are not going to reduce the car price, and rather they have this what we call if we go a bit if you put a bit of economics into this, okay, it will be what we call a price inelastic. Okay, whereby inelastic price means if demand fluctuates, price rise. Something along that lines, okay. But basically, this thesis, based on my research, is voided. Okay, because right now Tesla is giving a discount on their cars to clear their cars. Okay, some can debate that this discount is like temporary CNY discount, end of year discount, clear old stock, blah blah. But in my opinion, okay, the fact that they are already giving a discount, okay, it does show that, is it that they have, like, you know, some excess backlog that they want to clear? Is it they got old stock that they want to clear? But the point is, they're giving a discount. Whether it's good or bad, you decide for yourself. Okay? Second thing, Tesla's growth. When we look at the growth of a company, there's two kind of capex, capital expenditure to consider, right? Okay, one is what we call your growth capex. That means the more you grow, how much money you need to spend. Okay, and you have another thing called your maintenance capex. So to keep the company running, how much you need to spend. Now, the problem, okay, that I usually have with Tesla, okay, is that for companies like Tesla, when they want to build a new car, the factory can only build that much, right? So if they want to increase production, they must open more factories. I think in the news, they did say that they're opening a new factory. I forgot where, but it was quite recent. Okay, so whenever they want to increase production by more, they got to build new factories. And this, to me as an investor, you know, you can say that they can break even on that factory in X amount of time, but I mean, at the end of the day, there's still this kind of growth capex that they need to incur before they can grow. Okay, now if you look at maintenance capex, okay, the like to let's say assuming they build the factory, they have to get the parts, right? All that parts to come in, etc., etc. And if we can see, okay, very recently they had some very bad news about maintenance capex. And this was basically yes, this company, Piedmont Lithium. Okay, very interesting. Okay, they amended. Okay, basically are supplying them like car parts, etc. Okay, and basically you know, they say that yes, we'll continue to supply you Tesla. Okay, but the problem, okay, is that this kind of amendment, this kind of like them making an announcement is very bad timing. Okay, the Tesla is already having problems, okay, with like producing the car. The last thing they want is for their supplier to like change any terms of their agreement. So these things in general make Tesla kind of susceptible to more, well, macroeconomic factors that we can think of. Okay, now, apart from this, if we look at like the fundamentals of Tesla, they are earning money, correct? They have a price to earnings ratio, they are profitable. Okay, but if we put all this into perspective, okay, all in all, in my opinion, to sum up the fundamentals, Tesla is still not at an area where I think investors can call it cheap. Okay, that is my summary for their fundamentals. Okay, next part we move on to technicals, my favorite. Alright, so for the last part of this video on my analysis of Tesla, we're going to do my favorite part, and that's the technical analysis. Okay, for those of you who are new here, basically technical analysis is an analysis of the trajectory of a chart to not say give 100% certainty, but to kind of guide you towards whether a price is more likely to go up or down in the future. Okay, so let's take a look at this chart over here. Okay, now this chart, okay, of course, if we look at it right now, okay, we can see that the chart is on the downtrend. Okay, the problem is that with this chart, the first thing that people kind of like to notice with these things is what we call the channel that the stock is trading in. So you look at these two blue lines that I'm drawing here. Okay, we can see very clearly, okay, that this stock is what we call on this channel where it's like going, you know, like bounce up, bounce down, up, and now it's down. Okay, now in terms of technicals, right? Okay, it makes sense, okay, in my opinion, okay, to conclude that after this bounce down, right? Okay, that Tesla will bounce up. Okay, it makes sense, okay, to conclude that. Okay, because it has done that in the past. You see, it's like up, down, up, down, up, down, right? Now, it makes sense to say that, but whether it's really going to happen, I don't know. Okay, but what I do know is that I bought. Okay, now I long Tesla 2 days ago, well, when it was at about 120. Okay, and obviously it dropped down to like close to hundreds lah. Okay, 100. Saw it green for a brief moment in time, but it went all the way down to 108 now. And on a short term, okay, my bets is that it will go up. Not telling you to buy lah, but this is what I did. If you look at some structural support levels, so we've got a super small line for this. A structural support level like the one I have here in purple, okay, this one is very interesting. When we look at the structural support level, we're referring to places where investors previously either sold or either bought. Okay, these are, or rather, whether these are key areas of support or resistance, we will, yes, I can explain that. Okay, support is where investors found value in buying, so that's where the stock bounced off. Resistance is where investors want to take money and run, so that's where they sold. Okay, so if you look at this line over here, right? Okay, this line that I plot here. Okay, now let me be a bit more generous. I'll go up a little bit. Okay, hello. Okay, now this line here, I zoom in. Okay, this key area here, okay, this $100 level, we can see that previously in the past, where was this? This was July 2020. I think that was like COVID. I don't know lah. Okay, but basically at this point in time, we realized that investors, they decided to buy, and they decided to buy at prices of about, looks like about like what is this? Like what, 90. Okay, so based on this, right? Okay, we can conclude, okay, that 90 is a very, very, very strong support level for the stock. So if you were to make a buy at 90, does it mean that it will drop further? No. It might, yes or no, nobody really knows. But it does mean that the stock can potentially find some form of momentum at this level based on historical evidence. Okay, not that it can predict the future, but based on historical evidence, it implies that this stock can find rather there's a possibility of it rebounding at this 90 to 100 level lah. Okay, that's one. Okay, now also, okay, if we look at another indicator that I like to use very often, okay, it's called the RSI, so Relative Strength Index. I won't go too much into like oversold and overbought levels, but basically when you look at this little chart here, right, okay, just look at the purple line alone. Okay, you can see that whenever the stock reached this purple line, right, okay, and it broke below this 30 level, that it kind of rebounded up lah. Okay, so based on this, right, and we see last time it reached this same levels, it was like what, 2020. Okay, so once again, based on this, okay, as once again historical evidence for us to kind of anticipate what may happen in the future. Okay, it is a very strong indication that at these levels, okay, investors have bought back in. Yeah. So based on this, okay, I like the technical setup for a short-term rebound. Okay, but I am not long on the stock, like 5-year long. That's just not my style. Okay, so this sums up the technical analysis part of the video. And okay, just very briefly, and also as well, we see the blue line here, this curving one, and this green line. Okay, blue line 50-day moving average, green line 200-day moving average. Okay, where these lines, where the blue line break above the green line is a sign to long. Okay, and that happened, you see, like back in like what, 2020. Okay, this area here. Okay, and when the blue line goes below the green line, that is, okay, I wouldn't say too short, okay, but that kind of shows that the trend has changed. Okay, so if we are going to wait for a point in time, okay, to really go long on this stock where you want to be like really like sure, okay, once again not 100%, you will wait for a time when this blue color line once again tilts upwards. So you can see over here, September 2022, see, the blue line tried very hard to breach this 200-day average, and it failed. And then after that, wow, free fall. That's where we are now. Okay, so once again, technicals to sum up, I like the short-term trend, long-term trend, not good. In conclusion, okay, Tesla stock, is it a buy or not? Okay, now, myself as the boring husband, okay, TBH also can stand for to be honest lah. Okay, now, so to be very honest, okay, I am long on Tesla in the short term, no more than 2 or 3 months. Okay, but if you're asking me to buy and hold Tesla like forever and ever, I think I am still a little bit skeptical on that. Okay, and the reason is because Tesla was once, the only player in the market, the only prominent player. To date, okay, there are a lot of other players that came out, and a lot of other players that are like pretty solid as well. I mean, think of like Xpeng Neo, probably, okay, I wouldn't say Lucid, that one feel a bit like in the air. But the point is that the market is now so flooded, with so many players. It's difficult, or rather, it's difficult to say, if in future Tesla can still hold on to this competitive advantage, even with, this idea that they have a cult following and they're more like an innovative company, blah blah. Okay, so that's one reason why I don't hold on to Tesla long term. The second reason I don't hold on to Tesla long term, okay, is because I think, in my opinion, mine solely, okay, I think that the fate of Tesla is very, very strongly revolved around one person. Okay, and we all know who that is. Now, if this person loses focus, if this person decides to do something else, which he has, I think we've all seen in the news, I feel that this gives investors a little bit of like, it makes them feel kind of uneasy, because they're wondering, like, hey, is Elon Musk still like focused on what he's doing? Is he not? I can't say I'm not his friend, okay, but based on the news, you can see that right now, Elon Musk has a lot of side projects, and no matter how wonderful his mind is, I think that the more side project you have, it does take your time spent away from the main project. So it's because of this, I feel that, of course, a bit tricky, okay, and I wouldn't say that even if he does decide to, do away with all his side projects, that I will feel comfortable about it, but in general, I would say that I am not comfortable at all that the fate of this company is more or less determined on the fate of one person. Very, very tricky there. Some may like it. I mean, having a persona to a business is what gives you a very unique advantage, correct? Because you can copy everything, you copy the car design, copy the XYZ, but you can't copy a person. Because you can't copy Elon Musk. That's one reason why people like it. But in my opinion, I feel a little bit uneasy about that. Okay, so once again, to sum up, I am long on Tesla in the short term. I think that based on the technicals, it will rebound. But if it fails to rebound, and we will see very soon whether it fails to rebound or not, I will probably kind of like cut it short, make a loss, that's fine. But if not, this is my only Tesla position. I don't have any more. If you like the video, let us know. If not, alright, thanks for watching, and we'll see you guys in the next episode. Bye!